Is this the week the market flips? My market monitor gauge is flashing yellow, right where the big move could start. Hey, welcome back to the Stock Operator channel. This is your weekly edge on stocks, gold, and crypto. And today, I'll show you what the headlines won't, the hidden market breadth, cycle shifts, and cross-asset signals that reveal the real risk and opportunity before the crowd catches on. Whether you're managing your own portfolio or simply want a clearer read on where stocks, gold, crypto are heading, this breakdown is designed to give you that X-ray view so you can buy when risk is low, trim when things are stretched, and stay calm when volatility spikes. So here's what we're going to cover in this video. We're going to go over the market monitor and the cycle forecast, my proprietary gauge on the US markets, some Wyckoff technicals on the S&P 500, QQQ, IWM, also some Wyckoff technicals on some hard assets like gold, Bitcoin, and Ethereum. By the end, you'll know exactly where we are in the current market cycle and how I'm going to position my portfolio getting ready for the next big move. If that's something you're into, stick around. Let's start with the market monitor, which I build on the IWV index. This is the iShares Russell 3000 ETF. This tracks nearly every US stock, giving a true read on the entire market. So a quick trend check. So the price is above every key volume weighted average price, the 16 period, the quarterly, the yearly, and even the 4-year. So what does that mean? Basically all 4 major time frames, from the shortest swing time frame to the multi-year trend, are pointing up. But trends move in waves. My market monitor tracks 4 stages. Green, which would be a rally, yellow, which would be a rally under pressure, red would be a decline, and orange would be a attempted rally. And right now we've just completed a strong green wave and slipped into a yellow cycle. So historically, yellow phases last about 8.8 days with an average move of about negative 0.35%. So we're on day 3, already down 0.32%. One more decisive down day of about 0.2 or more would trigger a red signal. So why does this matter? Because these color shifts often mark tradable turning points in the market. Yellow tells us that the rally is losing steam, and red warns of a deeper pullback. So some breadth and internal divergences for y'all. Here's where it gets fascinating. The breadth is diverging from the price. So only 57% of stocks are in stage 2 uptrends, 27% have already rolled into stage 4 downtrends, another 11% are drifting sideways after previous rallies. The index itself is strong, but more individual stocks are weakening beneath the surface. This is a classic late cycle pattern. Other internals confirm the tension. The put-call ratio is stuck near 0.5 and 0.6. This signals a lot of complacency. The VIX, the volatility index, sits around 15. Historically, this is bullish, but often it can be contrarian. If things stay too complacent for too long, pullbacks can happen, and sharp pullbacks happen a lot. So the correlation index dropped to about 10. This means the stocks are moving less in sync. This is a sign that rotation and hitting weakness can emerge fast, but currently correlation is on the bull's side. So this combination, a strong index, weakening breadth, ultra low volatility often precedes sharp rotation or surprise pullbacks. And all we need is about one more down day to trigger that red cycle. So let's dig into some Wyckoff technicals on the major market indexes. So for the S&P 500, prices ride above the 16-period moving VWAP. But heavy volume isn't translating into gains. That's textbook distribution. So big players are selling into the strength. Early rallies responded strongly to volume spikes. The latest one did not. When you see high volume with little price progress, smart money looks like to be there unloading their shares. So in the QQQ, today we saw a climactic kind of gap up of about 1%, followed by some fading action intraday as I'm making this video. Volume is heavy, but the index is struggling to extend. It's pressing up to the top of its 2023 uptrend channel and looks like it's failing this breakout here. So the IWM, this is the Russell 2000. So small caps tell a little different story here. IWM is stalling right at a key breakout resistance. That could be constructive basing action before we move higher, or it could signal that the risk appetite is fading and volume is coming in, but price isn't following through, which means that we are waiting for some confirmation and they could be selling this level here. So here, the takeaway from these indexes are we're grinding higher at the moment with stealth weakness underneath the surface. This creates an environment where sudden reversals can catch many traders off guard. So now take a look at the hard assets like gold. This is like exploded right out of a giant base, up another 1.6% today. Commodities behave differently from equities. When they break out, they often climax vertically because supply is finite and demand can spike. It's like the opposite of equities. Equities can just climax to the downside in V, but gold can climax in V on the upside. So right now, gold shows no signs of exhaustion. It's stretched above the 16-period moving average and could pause sideways. But until we see a parabolic blow off top or a decisive breakdown after that, the path of least resistance is still up for this asset. So for diversified investors, that's a powerful hedge against equity turbulence. So crypto, this is some resilience beneath the surface. So as far as Bitcoin, I know last week we talked about how it was looking weak and we were neutral to bearish. Today's action is pretty impressive, up 4.5%. This is bouncing perfectly off of this key support area. We were neutral to bearish, like I said last week, but this rally looks a little bit different than the previous wave. The volume on the last 2 days is a lot stronger than the late August bounce. A sustained push above $66 would turn the setup outright bullish. So for Ethereum lagged Bitcoin today, but it's showing a constructive pattern. After a sharp undercut of the quarterly moving average, we saw a volume spike and now it's recovering. This is looking to be very constructive, like a Wyckoff spring. If ETH can climb above $33 here, the chart flips bullish. So crypto's independence from equities makes it valuable when stock breadth weakens. It can rise even as index stalls, offering uncorrelated upside, which is what we really want that in our portfolio. So how am I going to use this information? This is going to help me adjust risk and not be emotional. So a yellow cycle means to tighten stops, scale positions, rebalance, and be ready for a red signal. You don't have to sell everything, just manage exposure intelligently and balance the portfolio. So watch the rotation flow. So capital may move from crowded mega caps into gold or crypto, which is what it's looking like. If you see strength in those areas while breadth weakens, that's the market telling you where opportunity is. And then, mark the calendar. My cycle forecast pinpoints to a potential intermediate low around October options expiration, about October 17th. That's historically when new uptrends can start. Use that date as a reference for deploying fresh capital if conditions confirm. I will probably be doing that. And then stay data driven. Remember the numbers. Yellow cycle averages about 8 to 9 days. Average move is about negative 0.35%. The distribution count at the moment is about 5. So one more and we're red, which is going to produce a pretty decent downtrend in the market. These aren't guesses. They're statistical edges. So lastly, this is a big picture and the mindset. The market rewards preparation, not prediction. Our job isn't to forecast every tick, it's to recognize when risk is rising and when opportunity is asymmetric. Right now, signals say to be alert, but not afraid. Long-term trends are still up, but internals are flashing short-term caution. For the long-term investors, like myself, that might mean holding core positions while trimming high beta trades. For active traders, it might mean tightening stops or rotating into assets with cleaner setups like gold or selective crypto buys. So hey, if this breakdown helped you to see the market differently, do me a favor and hit that like button, make it black. Really appreciate it. It's free and it really helps out the channel. And hey, if you like this content, if you want to subscribe, that'd be fantastic. Really appreciate that. And if you guys want to drop a comment, are you watching some stocks, gold or crypto most closely this week? What are you guys checking out? Your ideas help shape future videos. And remember, I built this content so you guys can gain some practical value every week. The more feedback and interaction we have, the sharper these video updates can become to help you guys out. So yeah, the markets are living systems. So right now we have a bullish long-term trend, yellow short-term cautionary flag in the short term, and some divergences under the surface. And that rewards attentive investors. Whether you trade daily or simply want to compound wealth intelligently over time, understand that these signals can mean the difference between chasing noise and owning the move before it happens. So hey guys, stay patient, stay data driven, and as always, stay one step ahead. Hey, thanks again for watching the Stock Operator channel, and I'll see you on the Wednesday watch list video. Cheers.